Hello, good morning, ladies and gentlemen. Good afternoon, good evening to you as well, depending on whichever part of the world you are tuning in from. Happy Good Friday to everyone, all to my Christian brothers and sisters out there. And as usual, I am excited to be with you here this morning as we are going to be taking another fresh new look at the financial market today. Before we kickstart the session, our routine is to confirm that we are all on the same page. So if you can see my screen and hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi or giving me some sort of feedback to confirm that we are all on the same page, and then we can kickstart the session. So I really look forward to your feedbacks in the comment section, and thank you very much as you do so, as it will help me feel good that we are all on the same page. So let's see what we have in the comment section, and thank you very much guys as you do so. So let's see what we have here. So I can see J Books. I can see Sophia. Good morning to you guys. Hello, Carrie. Good morning to you. Glad to have you around with us today. Mortazim, I can see you. All right. I think we have a couple of feedbacks here. Do we still have more? Can we still get more in the comment section? I'll really appreciate that. Happy Good Friday to everyone in the house. All right, so I think with this couple of feedbacks, this is enough for us to confirm that we are all on the same page. So in that regard, I welcome you all once again to another promising edition on the Extra Speed Live. My own name is Sheriff Daramola, and for the next 1 hour I'm going to be your host, as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. Well, considering the nature of today's trading activities, we are going to be taking some factors into consideration, one of which is the fact that major markets is going to remain closed today due to the observation of the Good Friday, and due to this reason we may likely be seeing subdued trading activity, resulting in extended sideways trading activity. So we are going to be taking this into consideration as well. And then the other one, which is peculiar with last trading day of the week, where market participants, especially on the open markets, are likely going to be rounding off their trading activities ahead of the weekend. Now, in an era where there is these geopolitical tensions everywhere, the weekend is enough to change the market dynamics. So majority would not want to hold on to a position over the weekend, and this may likely result into reflect on the chart as a retracement move in that regard. So we are going to be taking all of this into consideration while we review the current market structure today. So in fact, I have been able to do a comprehensive analysis on all of the assets on our watch list for this week to find a simple way that we can use to position ourselves for the next move. So far this week, we have been monitoring 4 financial instruments, which includes the USOILSPOT, which is doing very, very well at this point in time, as we are running with over 500 pips on that one. Then on the USTech100, where we still see our sales position still struggling to gain some traction. And on the USDJPY, the market is still very choppy as the uncertainty lingers on resulting in a sideways trading activity. And finally, my favorite amongst them all, the XAUUSD, where I will say that asset is the most profitable asset on our watch list for this week. So we are going to be looking at all of these assets today again and see how we can manage our existing positions while we also strategically position ourselves for the next move. Now, for those of you who are joining us for the first time, who are wondering what this is all about, well, to simply put, we are technical traders who come together on a daily basis in anticipation of the New York session. So we come here to review and analyze the current market conditions and of course see how we can manage our trading positions too as well. And this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And my aim here is to equip you all with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you become at comprehending our analytical approach, which eventually helps you in making your informed trading decisions on your own. So once again, I do welcome you all on board and encourage you to actively engage in the comment section. So with that being said here, we shall be diving right into the business. And as usual, the first thing we normally do on a daily basis is to keep tabs with the fundamental factors that are likely going to be influencing the sentiment in the market today. And based on the asset we have been monitoring since the beginning of the week, we are focused on economic features from both the United States and the Japanese economic docket. Now, we have been monitoring some mid-tier features, and of course, they've had some way of influencing the sentiments in the market. However, the major highlight for the week did not come until yesterday, Thursday, March 28th. And one of the items we were looking forward to yesterday was the gross domestic product annualized for quarter four, which came in higher than expected at 3.4%, giving us an insight into how the US economy expanded in the last quarter. And it's further emphasized how resilient the US economy is, as in, quarter out, we have seen the economy expand progressively. And we also saw the initial jobless claim count yesterday, which revealed a 210,000 figure compared to the previous data of 212 and the expected data of 215. So this is a very good result, revealing how strong the labor sector is in the United States. Then later on yesterday, we were looking at the CPI data from the Japanese economic docket, which is considered to be an inflationary data, and of course giving us an insight into how the inflation of the Japanese economy has been. And the data came in at 2.6%, which emphasized that inflation is gradually thinning out in the Japanese economy, hereby welcoming the idea of the potential of the Bank of Japan pivoting from their current ultra loose monetary policy. And of course, the market did not really reacted significantly to this data, as the extended sideways trading activity on the USDJPY still remains the same. So today we are going to be looking at that chart to see how we intend to position for any opportunity today. So stay tuned in so you don't miss out on that one. Then the retail trade data came in very good for the Japanese economy, coming in at 4.6%, about 1.42 deviation, as it was higher than the previous data of 2.1% and the expected market consensus of 3.3%. So it has been quite an mixed data from the Japanese economy yesterday. Now, today, Friday, March 29th, the last trading day for this month and the trading day for this week, we will be looking forward to a couple of impactful events from the United States. And one of them is the core PCE, which is the core personal consumption expenditure. Now, this data here is going to be coming in about, let's see, in about 2 to 3 hours from now. And this also considered to be an inflationary data, if you would ask me. And for those who don't know, the core PCE measures the average change over time in the prices paid by consumers for goods and services. Now, the anticipation of this data influences market sentiment as it provides insight into inflationary pressure in the United States. So we're looking forward to see what the actual data is going to be on that one. Then later on today, in about 4 or 5 hours from now, we are going to be seeing a couple of speeches, one of which is coming in from Dali, who is a member of the Federal Reserve Bank, and is also a member of the Monetary Policy Committee as well, and he is going to be giving a speech by then. And also we are going to be seeing the Fed chairman, who is going to be speaking 15 minutes after Dali's speech. And this the importance of this speech is that it will be giving us an insight into the bank's monetary policy stance, economic outlook, and potential future policy action. Now, the anticipation of the speeches can significantly impact market sentiment as traders and investors will closely analyze these rhetorics for clues about future policy direction. And considering the fact that today is going to be a public holiday, we might not be seeing any significant traction in that regard, but we will be looking at the charts in a moment. Let's see what is really happening and what we're going to be doing to manage our positions, while we also strategically position for the next move if it's going to even happen. So with that being said, here we shall be diving right back into the charts, and the first asset we are going to be looking at today is going to be the USOILSPOT. Now, on the USOILSPOT, we've done pretty well since the beginning of the week. Remember, we have been buying this asset since the beginning of the week, though we had some situations where we sold sometime on Tuesday stroke Wednesday, but that traction did not move very well, and until yesterday, Wednesday, Thursday, we joined the uptrend continuation. Now, for the sake of educational purposes and for those who missed out on our earlier sessions, let's run through what really happened at the beginning of the week that led to the decisions we made. So first of all, on the higher time frame, we were able to identify a couple of structures. Let me refresh our memories into this. So we shall be going back into the 4 hours time frame. Now, on the 4 hours time frame here, what we did was to take into consideration the character of price action in the last 4 to 5 weeks, and it's very obvious that price action has been very bullish, and as a result of this, we connected the series of higher lows here, giving us a couple of ascending trend lines to work with. And you know, when we have an ascending trend line on our chart, we want to be looking out for patterns and structures that support the idea of buying, and there is no way we can be considering selling unless this ascending trend line is breached and broken to the downside. And of course, this never happened throughout the course of this week, supporting the bullish idea further for us all. Now, with this information we gathered here on the 1 hour time frame, right here on the on the 4 hours time frame, so back to the 1 hour time frame, and at the beginning of this week, we begin to notice an indecisive phase, that is a range bound structure, where price action was oscillating around our key level at the $81 area, giving us a structure to work with ahead of the new week. Now, with this situation here, you know how we do it in this community. When price action falls into a range like this, we exercise patience, waiting for the market participants to make a decision, which will come in the form of either a breakdown of the support line of that range to give us an opportunity to buy, to sell, or the breakout of the resistant line of the range to give us an opportunity to buy. Now, with this situation and considering the fact that price action was still trading above the ascending trend lines we identified on the 4 hours time frame, it made a lot of sense for us to position ourselves for an uptrend move, and we did took advantage of that opportunity at the breakout of both the $81 area and the $81.13 level, where we also added more buy positions at the breakout of the $81.70 level. So we had a minimum of about 3 buy positions at the beginning of the week, and we were able to close that buy position with a minimum of about 150 to 200 pips after the bearish momentum happened. Then we had the privilege of selling during the Tuesday's trading session, as we saw price drop below our key level, and in fact it moved about 60 pips thereabouts before the bullish traction began all over again. And if you remember, right here on Wednesday, we talked about the fact that price action is back into the ascending trend line we identified on the 4 hours time frame, which shares a beautiful confluence with that $80.50 level. And one thing we said here on Wednesday was that if we see a bullish traction from that area, we are going to be looking at buying the breakout of the $80.70 level. And in fact, we saw what happened here on Wednesday. I think during our live session, we already had a buy position triggered. And I did mention here on Wednesday that for those of us who missed out on the breakout of the $80.70 level, we will be looking at a retest of structure to continue the uptrend move. And this was exactly what happened about a couple of hours into the New York session on Wednesday, triggering our buy limit order. And since that moment, we have been buying the US All Spot. And remember, we had multiple levels, such as the $81 level, the $81.70 level. We also added more at the $80.25 area yesterday. And as you will see, we have a minimum of 4 buy positions running in profit of over 500 pips. Now, for those of us who capitalize on this opportunity and stayed faithful to our analytical approach, well done and kudos to you for being on standby. Now, as it is right now, it is important that we move all our stop losses right now and secure these current buy positions, as we never can tell. We could see any sudden pullback that could happen as market participants round off their trading activities for the month of March, and of course for this week too as well. Now, where is it most appropriate for us to move all stop losses to? Well, I'm considering anywhere around the $82.50 level at this point in time to secure all buy positions as we continue to monitor price action at this point. Now, what is the reason behind this ascent in price action on the US All Spot? Now, the increase in crude oil prices is primarily due to the anticipated continuation of production cuts by the OPEC Plus members, and despite heightened geopolitical risk causing concerns about potential supply disruption, it is unlikely that OPEC Plus will alter their oil output strategies until a full ministerial meeting scheduled for June will happen. Additionally, the ongoing Ukrainian attacks on Russia's energy infrastructure are reinforcing the global perception of tightening crude supplies. Then the recent collapse of the Francis Scott Key Bridge at Baltimore is affecting fuel suppliers in that area, as they are anticipated to face more delays in trucking and other logistical hurdles. So in light of this development, I'm of the strong feeling that the path of least resistance for oil prices remains to the upside. Now, the question we want to be asking now is, what form or what pattern or what path will this uptrend situation happen? Are we going to see some retracement move, maybe as a result of profit-taking activity, before the uptrend continuation will happen? Or are we going to be seeing price just continue all the way to the upside after forming an uptrend continuation pattern? Now, to guide our trading decisions for today, if ever price is going to move, as you will see here, the last 24 hours has seen price stalled at around that $80.80 level. Now, this is due to the public holiday observed by major markets across the globe. But those who still have their market opens may want to be doing some profit-taking activities. We never can tell. So how do we manage our positions today? Now, while trying to understand the current market structure, what I did here on the 1 hour time frame was to take into consideration the character of price action since the in the last 3 days, that's since Wednesday's trading session. And if you look at it closely, you will see that market had consistently and uniformly found higher highs and higher lows. Now, if we take it a step further to connect the series of higher lows, you see we have a beautiful ascending trend line to guide our trading decisions for today. And if price action continues to trade above our ascending trend line, you know how we do it. We will continue to look out for patterns and structures that support the idea of buying this asset. So the question now is, will price action retrace into the structure today in an attempt to continue the uptrend? Or are we going to be seeing price break out of the resistance line at the $83 area to continue the uptrend? Or will there be profit-taking activity as market participants round off their trading activity for the month to incite a sell-off to the downside? So you can see how crucial this ascending trend line is, as it's going to be playing a major role in guiding our trading decisions for today. So I encourage us all to mark out this level, this trend line on our chart, as we will be using it to guide our decisions for today. And please note that due to the expected subdued trading activity owing to the public holiday, we might not see any movement in price action. So just ensure you move your stop losses accordingly, secure the position. And if you are a cautious trader, you might as well close all position and call it a day on the USOILSPOT. So let's see how the market is going to play out from this area, using that ascending trend line as a yardstick to guide our decisions going forward. If you have any questions whatsoever as regards to what I've explained, or you need some clarifications whatsoever, please feel free to drop your inquiries in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. You can use that time as well to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions today. Stay tuned in, guys, and see you on the other side. So I see you, Rohin. Good morning to you, Rohin. Happy Friday to you. And Rohin says here that, can you please tell us about gold? Of course, we are going to be talking about gold in a moment. Gold is amongst the instrument we have been monitoring since the beginning of the week. So we are going to be talking about that. So stay tuned in so you don't miss out on the ideas I have for you on that one. All right, Ryan. Okay, so in the absence of no further questions, I'm of the opinion that we are all on the same page. In that regard, let's move on to the next asset on our watch list. So the next asset we are going to be looking at today is going to be the USTech 100, which is popularly known as the NASDAQ. And so far this week, we've not really done significantly in terms of profit taking for this week. As you will see, the market has been very choppy. In fact, it's an extended sideways trading activity, which is usually peculiar with an all-time high zone. Remember, the USTech 100 is at an all-time high, and whenever price action gets into an all-time high, it usually takes some time before participants in the market acclimatize to this area before the uptrend can now continue. Now, as a result of this fear that price may crash from this area, we see how major key players tend to do profit-taking activities around this area, which obviously will reflect on the chart as retracement moves, consolidation phases, or even choppy market conditions. And if you look at this chart right here on the 1 hour time frame, you see that the market has been more of a range bound since the beginning of the week. Now, if you remember vividly, at the beginning of the week, we had this small range bound structure where price action was initially confined within the 18,365 level and the $18,320 area before it now expanded into the highest level here at the 18,390, and then the lowest point for this week at the $18,180 area. In fact, it is a wide range bound structure we have at this point. However, despite the range bound structure, despite the choppy market conditions, you will see that within that range we had this descending trend lines, which projected the idea that sellers may try to be pushing price to the downside, maybe in an attempt to incite a retracement from that all-time high to the downside. Now, after connecting the series of lower highs since Tuesday's trading session, we had this major descending trend line guiding our trading activity through the second half of this week. And you know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we want to be looking out for patterns and structures that support the idea of selling that asset. Now, during our live session yesterday, we noticed, let me zoom in so that we can see things clearly. We noticed how choppy and consolidative the market was as we saw price confined within the 18,300 and the 18,250. But for the fact that price action was trading below the descending trend line, we agreed to sell the USTech 100 below the 18,270 and only consider buying if price breaks out of that descending trend line to break out of the 18,320 level, which never happened. So we had our sell position triggered yesterday, and for the last 24 hours price was trading within this whole area, though the sell position is still running and active with about how many pips running now? I think about 23 pips thereabouts still running, but it still looks as if sellers are not strong enough to push price to the downside, has that zone between the 18,250 and the 18,220 continues to be a strong demand zone. As you will see, every attempt by the sellers to break through has always been met with strong resistance from the buyers. So due to this observation and this robust demand zone here, I'm suggesting that we move all stop losses on this current sell positions to break even, so that in case if buyers gain traction today, we will not be taking out any loss on this particular one. Then another thing I would like to consider here is the public holiday, which of course has stalled price action. As you will see, price action has remained around the 18,245 level in the last 12 hours. So just move your stop losses right now, secure this current position, and let's see how the market will play out from here. If it continues to the downside, that is, the open markets continue to trade and it drops below the 18,220, we could be looking at more selling opportunities, and a further breakdown of the 18,180 level could welcome more opportunities to sell. However, if price action breaks out of that descending trend line, I'm not sure buying here yet. I still feel that above the 18,320 is still looking promising to buy, while we look out for more opportunities to buy at the breakout of the 18,350 and the 18,390. However, if we can see a convincing structure that suggests that buyers are getting stronger above that descending trend line, then we could actually buy before the breakout of the 18,320 level happens. Now, one of the things I would like to see here is an engulfing bullish candle slicing through that descending trend line, and in fact I would like to see some confirmation like a retest of structure and signs that sellers are finding it difficult to drop back below that descending trend line. Then if this happens, then we can actually join that uptrend move and then maximize the move by adding to more our buy positions at the breakout of the levels we identified earlier. So this is my simple view on the USTech 100 for today, and our center of focus basically is going to be around that descending trend line, where depending on how market participants react to the descending trend line will determine if we are going to be buying or selling. But I'm of the opinion that whatever happens, the traction will not be significant. So if you are a conscious trader, just like I said on the US Oil, you might as well call it a day on this asset, and let's see what will happen at the beginning of the new month of April. So this is my perspective on the USTech 100. If you have any questions whatsoever, feel free to let me know in the comment section below. As always, I will be taking the next 10 to 15 seconds off, while you can also use that time to mark out these levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions today. Stay tuned in, guys, and I'll see you all on the other side of the pond. So I see you, Sophia. Sophia says that which one is it that we need to be on the buy side today? I've been talking about this since morning. We talked about the USOILSPOT about 10 minutes ago or so, and we did identify areas where we can look out for buying opportunities. I hope you marked out those levels accordingly. And right here on the USTech 100, we just identified area above the 18,320 for buying opportunities. And I did emphasize here that we could actually join a bullish move before the breakout of the 18,320 happens, if we can see a convincing technical setup like a breakout, retest of this descending trend line, where the inability of sellers to continue below the descending trend line will give us some buy pressure here, giving us the privilege of continuing the uptrend above the 18,270 level. And then we identified multiple levels where we could had more buy position if price action ever breaks out of those levels. So I hope I clarified that to you, Sophia. And we still have more assets we are looking at, two more assets we are going to be looking at today to see how to capitalize on any opportunity that the market presents to us today. So I encourage you to stay tuned in so that you do not miss out on these ideas we will be deliberating on. So in the absence of no further questions, I'm of the opinion that we are all on the same page here. So let's move on to the next asset on our watch list for today. Stay tuned in. So the next asset we are going to be looking at today is going to be the USDJPY, and I think I saw a comment talking about the USDJPY. Okay, that's James D. We're saying that could I bet on the upside on the USDJPY? I hope you are around here, James D. If you're around, we are going to be talking about the USDJPY in a moment. So as you will see, the USDJPY is in a consolidation phase since the beginning of the week, and in fact even following the release of Japan's soft CPI report and mixed industrial production and retail sales data. The verbal intervention from Japanese officials also has pressure on this particular asset, resulting in this extended sideways trading activity. The Bank of Japan's cautious stance to maintain accommodative monetary conditions contributes to selling pressure on the Japanese yen, while on the other side of the pond, hawkish remarks from the Federal Reserve official may continue to provide some support to the US dollar. Now, the juxtaposition between these two perspectives is resulting in this range bound structure you will be seeing on this chart. Remember, at the beginning of the week, we had this range bound where price was initially confined within the 151.430 and the 151.050 area to emphasize the level of indecision going on in the market during the first couple of days of the week. Now, you know how we do it when we have a range bound structure like this. We exercise patience and wait for price action to either break out of the resistance line of the range, giving us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. And during the first half of the week, it was more of price action finding higher highs and higher lows, and we were able to capitalize on the breakout of the 151.430. We also added positions at the breakout of the 151.625 and then the breakout of the 151.750. In total, we were able to make over, for the first move, we made about 40 pips. The second position made about 15 pips thereabout, while the third position closed at break even. So we were able to recoup about 35 to 45 pips of profit during the first half of the week. Now, on Tuesday's trading session, where's this trading session? We saw this bearish traction, which I did told you that I missed out on that opportunity as there was no retest of structure. And we went on to say here that this bearish momentum, we want to see how the market is going to be reacting to that our key level at the 151.200 area, which interestingly shares a beautiful confluence with that descending trend line that we marked out since last week Thursday. And we all know from a technical standpoint that when price breaches a descending trend line like this, we expect that some point in time price is likely going to come back, retest the trend line in an attempt to continue the uptrend move. And with this theoretical idea in mind, we decided to look out for reversal patterns around the 151.200 area. Now, another thing we also acknowledged during our live session yesterday was the fact that since the week began, we saw how it has become difficult for sellers to break through that area between the 151.200 level and the 151.050 area, making it a temporary demand zone for our trading activities for this week. And of course, when price action is sitting above our demand zone, it doesn't make any sense for us to look out for selling opportunities, as the only condition that will make us sell is for price to break through that demand zone and retest it to join a move to the downside. Now, if you look at this market dynamics in the last 48 to 60 hours, you will see that price action has been confined within a range between the 151.430 and the 151.200. So we had the privilege of joining the breakout of this resistance line yesterday, but unfortunately that move did not do very well as we get stopped out as price dropped below our key level again. Now, with the situation here where price action has been confined within a range in the last 60 hours, how do we intend to manage our expectations as we go into the New York session today? Now, like I said earlier, remember the Tokyo Consumer Price Index for March rose by 2.6% year over year, and it's still not that significant, which for me still tells me that the inflation is still within the target reach, and hereby opening up the avenue for the Bank of Japan to pivot from their current ultra loose monetary policy. Now, potential intervention by Japanese authorities may limit the decline of the Japanese yen, as Japan's finance minister Suzuki yesterday ruled out taking actions to address the yen's depreciation. Now, in light of this development, there's been some uncertainty going on in this market, which obviously is reflecting on the chart right now as a consolidation phase between that zones we identified earlier. Now, if the Bank of Japan intervenes as they have warned, the prices of the USDJPY may drop significantly to the downside. Now, if I'm going to be looking out for selling opportunities, I want to see price drop below the 151.200 area. Remember, this is our key level for this week, and you know how we use our key levels in this community. As long as price remains below the key level, we want to be looking out for patterns and structures that support the idea of selling. Now, if the momentum continues to the downside, then we will be looking at adding more at the breakout of the lowest point for this week, which is at the 151.050 level. So you do want to be marking out these levels accordingly on your chart, as you will be needing them to guide your trading decisions today. Then there is one more thing I've also observed here is this ascending trend line after connecting the series of higher lows in the last 2 to 3 days. Now, I think that if this trend line is breached, we could have the opportunity of joining the breakdown before the key level is broken. But I want to see a confirmation happen before joining. So a breakdown, retest of that descending trend line, and I want to see signs that buyers are finding it difficult to bring price above that ascending trend line, and this will reflect on the chart as continued selling pressure below that ascending trend line to incite that sell-off. So we could join there and then look at adding more position, hereby maximizing the potential of that bearish move. So the only idea that will support the selling the USDJPY today is the breakdown retest of that ascending trend line. So you can see how crucial this ascending trend line is going to be for us today. Now, if price action continues to maintain traction above that ascending trend line, then we will be looking at buying the breakout of the 151.430 one more time again, and then looking at adding more buy positions if price goes ahead to break out levels such as the 151.625, 151.750, and the 151.900 area. So let's mark out these levels accordingly, as we will be needing them to guide our independent trading decision. And most importantly is this ascending trend line. So this is my simple view on the USDJPY for today. I hope I made myself clear, but if you have questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart. So see you soon, guys, and if you have questions, feel free to let me know in the comment section. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So I do hope you've marked out these levels accordingly on your charts, as you will be needing them to guide your independent trading decisions for today. And please, let's exercise patience. This whole setup could take about 2, 3, 4 hours before they mature. So with that being said, let's move right into the final assets on our watch list for today. So the final asset we are going to be looking at this morning is going to be my favorite asset amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what a phenomenal week we have here on this asset, as we have been buying this asset since the beginning of the week, capitalizing on the weakness of the US dollar and riding those ascending trend line all the way to the upside. And as it is right now, price action is hitting an all-time high zone around the 2,237.38 area at this point in time. And for those of us who stayed faithful to our analytical approach, well done and kudos to you. Well, in the last 24 hours, we had three new buy positions, generating a total profit exceeding 700 pips as gold reaches a record high. However, with major global markets, including the US, closed for Good Friday, gold price volatility is expected to remain very low and subdued. Now, the current upward momentum is driven by safe haven investments amidst economic uncertainties and the potential for the US Federal Reserve's interest rate cuts. Now, expectations of reduced Fed rate cuts could strengthen the gold and, of course, boost the uptrend continuation on this asset. Now, traders, as per the CME Fed Watch tool this morning, estimated a 63% probability of a Fed interest rate cut in June. Remember that lower interest rate typically devalues the US dollar, making gold more affordable for investors using other currencies. Now, for me, if we also consider the ongoing geopolitical tensions in the Middle East, which typically increases the appeal for safe haven assets such as gold, I think the path of least resistance for gold remains to the upside. Now, the question now is, what is the trajectory of this uptrend going to look like? Are we going to see a situation where price could retrace at some point due to profit-taking activities from market participants before the uptrend continuation happens? Or are we likely going to be seeing an uptrend continuation pattern that will incite the momentum to the upside? Now, before we go into the details of what we are going to be looking at today, it's important that we also take into consideration or revisit how the week started for us, especially some of us here, I know, were not part of our earlier session, and for educational purposes, it's important we have an idea into what really happened here at the beginning of the week. Now, if you remember, we started our analysis on the daily time frame on the XAUUSD, and this was what we saw on the daily time frame. Now, the first thing we saw here at the beginning of the week, after considering the character of price action since the month of October of last year, was that the market has been bullish. And to emphasize the strength of the buyers in this market, we were able to connect the series of higher lows, giving us an ascending trend line to work with. Now, in addition to the ascending trend line was our key level, which was situated at the 2,145 level. Now, why did we have our key level at the 2,145? Well, remember last year December 2023, we saw how this level was a strong selling niche in this market, though price tested that area. But as soon as price tested it, we saw the strong rejection here, pushing price to the downside. And not until the beginning of this month that we saw price action break out of that level. Now, as a result of this, we consider this area to be a key level and could be a platform to find new highs in this market. And after considering the consolidation phase, let me zoom in so you can see things clearly. So after considering the consolidation phase between the 2,195 and of course the 2,145 at the beginning of the week, we were looking at an uptrend continuation pattern where the breakout of the resistance line will be all we need to continue the uptrend move. Now, as you see right now, price action has broken out of the resistance line at the 2,195, affirming the uptrend continuation pattern. However, we still cannot jump into conclusion that this is an uptrend continuation pattern yet, due to the fact that this is a daily chart and the candle we are seeing right now, which broke out of that resistance line, is still running and has about 12 hours for it to close. So it could still turn out to be a shooting star candle, remember, to drop price to the downside. So we're still not going to be jumping into conclusion yet. So it's important for us to see how this candle is going to close before deciding on what next to do. Now, another thing I would like to call our attention to is, now if this closes above the structure, we have a breakout of structure. Are we going to see price drop down into the 2,195 in an attempt to continue the uptrend, or are we likely going to see price drop into any of these ascending trend lines we identified earlier? Now, with this information, let's scale back down into the 1 hour time frame, which is our execution time frame. Now, at the beginning of this week, when we were trying to capitalize on that bullish move, remember we had this range bound structure. But one thing we noticed at the beginning of the week was the fact that sellers were unable to break down this support line identified at the $2,164.50 level at the beginning of the week. Now, after observing the first 12 hours and the inability of sellers to break through that support line, we're beginning to suspect that buyers may likely be pushing price to the upside. So as a result of this observation, we marked out the $2,169 level as an area we will be looking out for our first buy position for the week. And since that moment, we have been buying the XAUUSD as we rode the momentum, adding more positions along the line with multiple levels identified for every trading session. So you can see we'll continue to ride the momentum. And yesterday during our live session, we were around here. So we saw this engulfing bullish candle here yesterday. We saw this strong engulfing bullish candle, which emphasized the strength of the buyers in this market. And what I said here yesterday is that we will continue to look out for buying opportunity, and that even if any selling potential comes in, that we still have levels like the $2,209, $2,202.50 level, and of course the $2,195 that could incite the uptrend move. So I joined at the 2,205 at a buy limit here, added another buy limit here at the 2,195, which obviously you can see price never even came close to that area. So we continued the momentum and added 3 more buy positions in the last 24 hours, scooping in over 700 pips in profit. Once again, I congratulate everyone who capitalized on this opportunity. And as it is right now, price is still around that 2,235 area for the last 12 hours. And the stall in this momentum is due to the public holiday that is being observed across the major markets across the globe. Now, due to this, if you still have your buy position running at this point, you do want to be moving your stop losses accordingly, securing this current buy position, as anything could happen today. Now, despite the expected subdued trading activity today due to the public holiday, we might as well call it a day, close your positions and go and have fun, enjoy your weekend, and we shall come back again here Monday to see how the market will be reacting to this all-time high. However, if you still want to stay updated, you still want to be on your charts, please move your stop losses accordingly. Very, very important, as today is the last trading day of the week. last trading day of the month and a day before the holidays, and we may likely be seeing some profit-taking activities as market participants close their positions ahead of the weekend. We're in an era where there is geopolitical tensions, and anything could happen during the weekend. So due to these uncertainties, majority may want to close their position. So I would like you to take this into consideration while you continue to monitor price action around this area. So what I will be looking out for around this area, if ever price action is going to move from this point, is either price drops into structure. So we have multiple levels here where we can look out for reversal patterns, which I doubt will happen today due to the subdued expectations of trading activity before the uptrend happens, or if price evolves into an uptrend continuation pattern around this area, a breakout retest could welcome more opportunities to the upside. So this is what we are going to be looking at today. I doubt if price is going to move, but if it does move, this is what we are going to be looking out to join to take advantage of new trading opportunities. So this is my simple view on the XAUUSD for today. I hope I made myself clear, and please remember, for those of you who still have a buy position running, kindly move all your stop losses, secure these current buy positions as we wait and see how the market reacts to the zone. So it's on this note, I will say we are getting closer to the end of the session. So if you have any questions, let's wait and see if there are any questions before we start rounding off on today's activity. So mark out these levels. I will take some 5-10 seconds off, wait and see if there are any questions before we go ahead to close for the day. Stay tuned in. All right, so in the absence of no questions, I want to assume that we are all on the same page, and it's on this note we have come to the end of today's Extreme Speed Live technical analysis session. We were able to take on all the 4 financial assets on our watch list, and this week was another profitable week for us all on all of these assets, though we weren't able to do very well on the USTech100 and the USDJPY, but we were able to make significant amount of profit on the commodity assets, the USOILSPOT and the gold spot. Well done, and congratulations to everyone who took advantage of this opportunity. Okay, I can see Ikari no Tenesh says that gold market is closed. We can move stop loss. Oh, that's true. So it could open later in the day. We never can tell. It could open later in the day. Sometimes we can see situations where market opens later in the day before it finally closes again. Please check the timetable for gold market and see when it's going to open again before. Then if it does, you can move your stop losses and secure your position. All right, Ikari, I hope I answered your question. Okay, so we were able to take on the USOILSPOT, the USTech100, the USDJPY, and the XAUUSD, where we identified simple trading setup, and we also took into consideration the fact that we may likely see subdued trading activities today due to the public holiday. So I also told us all to ensure that we have well secured positions, and while we wait for new opportunities, and if you are the cautious type, please you can stay out of the market and then wait for Monday to happen before coming into the market afresh. For those of you who joined us for the first time today, I do hope you are able to get 1 or 2 things from what we discussed, and if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually will help you in making your own independent trading decisions. So I look forward to seeing more of you. Same time Monday, 10 a.m. UTC, 11 a.m. West African time, as we come again to review these positions again and see how we can replicate the scenario we had this week for next week, which is the new month. So happy new month in advance to everyone out there. So it's on this note, I would like to wish us all the best of luck today. I wish you a wonderful holiday. Happy Good Friday to my Christians brothers and sisters out there. And I wish you best of luck during today's trading session. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.